All right, everybody. Sorry about that. Now, I'm probably lost some people. I'm sure. Maybe I'll wait for some of you to come back. But this will be posted anyway. I apologize for that. That I hit a button that I shouldn't have hit, and it killed my stream. All right. So let's get back to what I was talking about. Like I said, not sure who's gonna see my stream, but like I said, I'll repost it. Okay, I will repost it. So we're gonna go back over to hourly charts, which I was supposed to do. Okay, let's go back here. That just screwed me up when I did that change. All right, so this is our hourly charts. Okay, whoa, we're getting a little more weakness again. Interesting, interesting. Okay, so I don't want to like kill time on this too much. I'm just gonna reenact my marker here. All right, so let's get into it. Okay, so obviously on Friday, um, we opened up. Or we open up around. Well, this is an hourly candle, so sometimes that comes off a little bit. But we found resistance around the 67.80 area. Okay, we just couldn't go, and then we fell right towards the end of the day, right in this consolidation here. Okay, then we opened up Sunday night right here and just fell right to that exact level around the 6600 level, but really the 65, 83, 86 area into a major demand zone from the past. Also, a composite high volume node right here, that little box here. That's my composite high volume node from the past. That just means a large trading area right to it. Okay. Now we have that past demand and new demand that's formed down here. Okay. Now there's a gap. That's from Friday's lows to the overnight highs currently. Now we're looking at these charts. Okay. We have a look at that wick on the daily candle. And then the 4 hour, we've had some weakness. In the last 4 hours, the market has then opened and now it's starting to go push lower. Okay. So simple as I can put it right here. We have a new week opening gap here from the Sunday, right? Tried to fill it just recently, failed. I mean, you can't get any simpler than this. I think that the selling is pretty much going to be done, and you can look for some longs. So basically, what I'm going to look for, okay, is some retest of this demand zone anywhere in here to try to fill that gap at 67.15, last week's lows. And of course, I'm going to be very, very um, cautious off the open. It's probably untradeable for myself, like off the open. It's going to be crazy. We have a 30, close to a 32 VIX. Okay. I just can't see myself wanting to short. Big prior demand, new demand, and it's not like we're just rocketing up. All right, we're kind of like holding, pushing up, holding, pushing up, holding, right? Maybe a little profit take here. Okay, that is just a major level we hit. So that's really what I have to say. I'm just biased long. Okay, maybe I change my mind. Something makes me change my mind, but not really if we're in this demand zone. Okay. Now, if we're going to talk about the Nasdaq, right? It's probably the same thing. Okay. Let's look at this daily candle with that huge buying tail. Okay. That's pretty bullish. Okay. In the last 4 hours, a little weaker, right? But more of turning into a doji. And just like I talked about before, what are we doing? This is last week's lows, folks. From all that sell off, all that panic, NASDAQ is holding inside last week's range. Can that fall apart? Sure. Okay. Now, a little different of way that NASDAQ moved up. Consolidated, pushed up. You have a bullish Ferrari gap here. Consolidated, pushed up. Consolidating again. You have this gap here. Okay. With almost an equal high now at the overnight highs. Okay. Same thing I'm going to be looking for here. Okay. Same thing. Any pullback into this area is I'm going to look to buy to try to fill this gap. Okay. Now, obviously on the other side of it, let's say we just do this and you miss this and then we fill the gap, and when we fail, well, maybe you can nail short. But right now, I can't see anything other than me going, where's my opportunity to go long? Also, in the NASDAQ, look, this is last month's lows. This is last week's lows. Okay? Went to a major demand zone here, and also a high volume node, composite high volume node, 240s. Now, in a super volatile market, the market is very unpredictable because we could do this and then do this, right? I don't know. Okay? It's that the VIX is that high that this market can just whip, right? Probably going to reduce my risk even more today, right? Maybe I'm only going to be in 2 MESs, okay? And you'll still get relative movement because of the VIX, okay? This is what I'm looking for. It's not that complicated, but big gaps like this are very hard to digest, okay? Because it's a big gap, which then makes things all weird because then, like, stocks are down. Like, what do we do? People panic. There's a bunch of different mixed signals that happens. That's why big gaps are very hard to digest, because it's like, okay, oil's up, that's bad, but we just got bought at a technical level. So how much can we go? Just what I'm saying right now is what the market's going to try to do and try to digest when the market opens. That's why I'm saying off the open, we're going to have a lot of indecision, a lot of like, okay, do we just buy the market now because this is a dip? No, we don't. We sell it because crude's up over $100. You know, get what I'm saying? Okay, there's a lot of things to think about, and I'm going to just have to sit back and pick, be very, very picky. Okay. Now, what I'm going to show you guys now is just on that longer time chart, the high volume node. So this is what I wanted to just show you guys. This is a 4-hour chart. Yes, look at that high volume node right here that I have marked off. This spike. Look at that, where that market came. Right there to the tick. That's why I have them on my charts, folks. Okay? This is from the past. Literally, whoop. Okay, so I want to see it in a different way. We can look at a daily chart. There's the spike right there in the daily chart profile, right there. You look to the left. Look at that beautiful swing low down here we came to. Market's very efficient. Oh, let's go right down to the swing low. Oh, guess what? Everybody who was short, oh yeah, I'll take my profits there. You can't get any more clear of that's a profit take. Now, do we roll back over and take this out? See, we're back testing that 200-day moving average. I don't know. I'm not a fan of a short right now. Not in that chart. Just look at the NASDAQ real quick. NASDAQ also come down to where? A prior high volume node. That spike. Notice, look to the left. Right? This trading congestion is where we came. We did take out this swing low, but we're back inside this range. Look at the trading volume here. Right? That's where I said, boy, that NASDAQ has congestion. Yep. And we just made new yearly lows in the ES and the NASDAQ. Okay? So back here. Let's get to the markets. All right? Now, that's the gap fill. We have a large session, 116 points in pre-market. Woof. Okay? This is what we were just talking about earlier. Now, if we're going to get into scenarios now, okay? Like I said, I'm going to be biased long, okay? So, let's get right into it. So, we just talked about it earlier, right? We're gapping down. The gap fill is at 67.15. And that blue box represents the gap. We have been moving healthily, believe it or not. Consolidate, push, consolidate, push, consolidate. That is a healthy movement. That's not poor structure. That is not poor structure. If we just went like this and it was all thin volume, I'd be like, oh boy, this is not on healthy legs. I don't like these legs. Okay? But that's not the case. Remember, we hit a technical level. 200-day moving average in the S&P 500. Okay? So, what I'm going to look for. Okay? Got to be very patient. Any kind of movement, even if we did this, oh, we failed, right? And then we go like this into this area. Around the 66.40s. I am going to look to buy. Okay? Anywhere in here, I'm going to get that higher low. I'm going to try to fill that gap, and then it's gravy on top. Now, we dropped pretty mightily. I understand that we could be in this range today as well. We just dropped. Market needs to digest it. This will tell us if we move up here, I would say, okay, that war's getting really priced in. If we stay down here, okay, what else can happen? I don't know. There's friggin' bombs going off everywhere. There's oil on fire. I don't know what could happen next besides them bombing us somehow. That would be another craziness, right? All right, so any pullback, I'm going to look to buy. Even if it's a deeper one. Okay? It's pretty simple today. Now, shorts. A short to me, it is always can be had. But I want to look at it logically. Right? How much bullets do they have left? They do, but I don't like it. All right? So, but if you want to say what could happen, easily, this could be a short. So if we come up here, take out these overnight highs, and fail to fill the gap, let's say right in there, whoop, and you're like, ooh, that was a fail. You sweep, lower high, there you go. You take your profit here. Okay? Right there, around a little above the 66.20, you could probably get something. For myself, I think that's the harder play right now. Now, nothing's going to look hard with a 32 VIX, 31 VIX. Moves are just going to go boom. So if you're in it, enjoy it. Grab onto that friggin' avatar, I forget what you call those things that you fly on, and fly it. Because if you can, you'll get some nice moves. Now, you will get, when you're in something, it will fly. However, when it's trying to decide, am I going up or not, there's where it's going to be like surgical precision trying to enter this. Because there's where the whippiness is going to maybe knock you out before it does something. So, like I said, today, reduce your risk and account for the volatility. All right? This is all I'm really seeing that's a possible for the short. All right, moving on to the Nasdaq, and then we'll wrap it up. Here's your Nasdaq. Okay, your Nasdaq is already inside last week's range, holding last week's lows. Remember, last month's lows as well. We're inside last month as well. Remember, tech's been beaten down already. Doesn't mean it can't go lower. I'm just saying it's been beaten down. And again, what is our market doing? It's moving very healthily up, right? It dropped, boom, boom, boom. Then it was like consolidate, push up, consolidate, push up, consolidate. Do we do a push up again? I don't know. Okay, I don't know. Gap fill 24611. 24611. Overnight highs. Got equal highs right here to 245s. Remember, you came down to the 240s. That's a high volume node from the past. That's why I have it on my chart. That box was there before I woke up this morning. Whoop, it held that demand, right? So, it's all we really have to look at. Pretty simple today. All right, let's get into scenarios. And we're going to look at a long. It's very simple today. Now, it could be as simple as this, folks. You see how we're consolidating here, right? You have last week's, everybody's going to see this level, last week's lows and futures. You're holding it. Well, we all know how that works. Nothing's all simple. But if we came down here and swoop, you whipped into this demand, into the overnight most traded price, right? Week to date anchored VWAPs right here. Then you get a higher low. Woo boy, look for that gap fill. No, that's not a gap fill. That's the overnight highs. Look for that. If there's any kind of hesitation and text leading, you're going to rip right up, fill that gap at a 246s. I'm telling you right now, I can see it. That sweep, hold this swing low, push down to the overnight VPOC, rip up overnight high, then fill the gap. Now, if tech is not a leader off the open, all right, maybe that don't work. Maybe that don't work. Okay? But that is something that you have to be aware of that's going to probably happen. Okay? And like I said, it's very volatile. You might not see the normal thing that happens because what I'm going to guess, I don't know yet, but the ES might be at a 20, probably 20 plus points every 5 minutes, a candle. On Friday, I was seeing around 14 points every 5 minutes. That's what I'm seeing on Friday. So I'm probably going to be down to like right now maybe 2 MES, I'm sorry. Probably down to 2. I don't really want to get down to 1, but if I have to get down to 1, I'll have to get down to 1. Now, 1 MES would mean a 40 point for me, 140 point stop would be where I'd have my MES. All right. If I wanted to do 40 point stop. All right. Obviously, add another contract. That puts that in half. That's a 20 point stop. So I have to see. Okay. I have to see. Today, I will probably not go to break even as quick. I have to let my trade play out, especially if I'm loving where my stop loss is. Okay. So that's the long. All right. Even I'd say if we did this and really harsh pushed back in here, that might even be a nice long as well. But I'd rather get this. And like I said, it's going to be crazy today. Okay. Shorts, very similar short as the ES. I could definitely see it happening. Let's say we just rip off the open and go into the gap and you fail. Sweep that equal high, right? But then we come back, close inside. You get your premium, you get the lower high. That's a short. Target, probably if you want to take one off last week's lows. You break that, you're falling through the overnight VPOC. You're going to test around the 242s. Now, if you break that, you can go down lower. Okay? Do we take out the overnight lows? Man, this market would have to fall apart to do that. I like I said, I just don't see that. Now, hey, something comes out, news, whatever, anything can happen. Okay, what I know, but 7 years in the markets, right, is that the old me would be thinking, oh my God, this is going to fall apart because when you start trading, you're get emotionally wrapped into the theme. You think that crude's up, this is horrible, it's war, how can I be long, like this is like, this has got to fall, like you get emotionally wrapped into the now. and not understanding of how the market works. Markets price stuff in, then they move on. It's already happened. We know about the war. Anything new now, I can't even see besides us getting a bomb thrown here that would make anything change anything. Okay? You have to understand how the market works. If you don't, you get run over. You're not smarter than the market. Nobody is. The market prices stuff in, usually 6 months ahead of time. So when the negative news is negative and we know about it, yeah, guess what? The market knows. Don't tell me, hey, this is bad. Yeah, I know. That's why we just gapped down and hit a key level. Okay? Just wanted to reiterate that. Okay? That is your scenarios. They're pretty simple today. Simpler the better. All right? Now, please, give me 1 second here. Smash that like button if you enjoyed that analysis. That would mean a lot to me. Okay? Smash it. Now, I know I lost probably all you before because I was a dummy and hit the wrong. I have a couple Python scripts that run, and it closed my stream, so I apologize for that. Okay? Now, hopefully, you still join me every morning. Okay? Set that alert. Subscribe. Give you the market news, the economic calendar, technical analysis. Just gave you long and short trade scenarios in the Nasdaq and ES futures. Okay? Now, more in-depth coverage, join me. Confluence Trading. Go to my YouTube homepage, click on the link, sign up. What are you waiting for? Let me be your indicator. Come on. Come by. Okay? I hope to see you in there. Now, everybody have a great day. Remember, no trade is a trade. It's Monday, but it's going to be a very volatile Monday. And I'm going to make sure, man, I want to put this stock market in a box where I want to get it and be like, yo, I am not trading unless it comes to me. That is a lot easier said than done. All right? Everybody have a great day. If I don't see you in my Discord, I'll see you tomorrow morning.